Hello, everyone. I'm Matt Clark, research analyst for Money and Markets with your What to Watch on Wall Street this week. Stocks rose last week as the NASDAQ Composite Index hit a new all-time record. Investors are kind of banking on a new round of economic stimulus to include more direct payments to households, increased unemployment insurance, and aid for state and local governments. But it is actually going to be a big week this week on Wall Street. There'll be a lot of activity in a relatively compressed time. Remember, the market is closed on Monday in observance of Martin Luther King Jr.'s birthday. However, big IPOs, a rash of quarterly earnings, and new data releases are among some of the things that investors will be watching for on Wall Street this week. In terms of IPOs, there are a few initial public offerings on the schedule for this week. Perhaps the biggest one is a company that you've likely never even heard of, but probably should. MYT Netherlands, that's the letter MYT Netherlands, is planning to launch its IPO on January 21st and could see a massive market value. Now, MYT Netherlands is a foreign company actually based in Munich, Germany, which kind of begs the question as to why Netherlands is in there. But actually, it's the parent company to the website mytheresa.com. That's mytheresa.com. That's an online shopping platform that launched back in 2006. That platform is one of the leading Europe-based luxury fashion retailers. It offers products from more than 200 of the world's most recognized luxury brands. Think of things like Burberry, Dolce & Gabbana, Gucci, Prada, Saint Laurent, and Valentino, amongst many, many others. Now, according to the company, its 2020 average order was for around 600 euros. That equates to about $726. That's the average order. It registered about $579 million in sales for the 12 months ending September 30th of 2020. Remember, that's right in the middle of the coronavirus pandemic, and they still sold almost over half a billion dollars in product. The company also said that 30% of its sales in fiscal 2020 came from 2.6% of its customers who were part of its top customer program. Now, the company plans to trade on the New York Stock Exchange under the ticker MYTE. Renaissance Capital reported that MYT Netherlands hopes to raise around $266 million with an offering of 15.6 million American depository shares at a price range of between $16 and $18. Using the midpoint of that price range, the company could see a market value of around $1.5 billion. On a related note, Poshmark, which you probably have heard of, is a used clothing marketplace. It raised around $277 million off its IPO last week. The company priced at $42 a share, which was above its range of between $35 and $39. Now, for MYT Netherlands IPO, Morgan Stanley, JP Morgan, Credit Suisse, UBS Investment Bank, Jefferies, and Cowen are all book runners on the deal. Now, to take a deeper dive into some earnings, I'll get to the rash of earnings that we'll have this week. But I want to talk about one in particular. The Q4 earnings season was actually kicked off last Friday when several big financial institutions started to report. This week, the earnings season really gets into full swing as several big companies will lay out their last quarter performance. Instead of looking at the obvious, which would be banks, I want to focus on the earnings of a different company, but one that could line out how the broader market performed during the quarter. On Tuesday, streaming giant Netflix Incorporated, which trades on the NASDAQ under NFLX, will report its quarterly earnings. Now, Netflix, the best way to describe Netflix is really it's just one of the first and one of the biggest providers of streaming video content. You can watch shows, movies, documentaries, whatever from Netflix on several different platforms. This includes smartphones, tablets, smart TVs, other streaming devices like Roku or Amazon's Fire Stick. And while it started small, the company has grown into nearly 200 million subscribers around the world. However, the company is starting to face some competition and pressure from other platforms like Disney Plus, Hulu, HBO Max, and Discovery Plus, all of which are offering the same services, just a little bit more zero focus. Disney Plus focusing a lot on Marvel, Star Wars, things like that. You have HBO Max, you have Discovery, which is a lot of documentaries. Now, in their last quarterly report, Netflix reported a significant slowdown in the number of subscribers added to the platform. The company said it added about 2.2 million paid subscribers in Q3 of 2020 compared to 6.8 million added in the same quarter the year before. It did beat Wall Street expectations for sales by bringing in 6.44 billion. That was above the 6.39 billion forecast. However, for the third straight quarter, Netflix lagged expectations for earnings per share. It reported $1.74 per share in earnings, while Wall Street projected $2.13 per share. Now, despite that, the company remains in the black, thanks in part to the uptick in subscriptions due to the coronavirus lockdowns in 2020, although that uptick not nearly as realized as it has been for some other platforms like Disney+. Now, Wall Street analysts are a little bit snake bit when it comes to earnings for Netflix. The company reported earnings per share lower than expectations in each of the last 3 quarters, so analysts are projecting earnings per share of around $1.35, which is considerably less than what they projected in the last 5 quarters. They are also projecting $6.6 billion in revenue. That seems pretty close to what you could expect for Netflix. However, over time, the streaming wars are going to start taking a bigger toll on Netflix, especially as some more popular content, some of its more popular content it was streaming, like Marvel movies and things like that, have been moved to different platforms. Netflix is putting a lot of stock into original content, which isn't necessarily a bad thing, but there could be some rough waters ahead for the streaming giant. Now, in our data dump, the U.S. market is obviously closed on Monday due to the Martin Luther King Jr. holiday, so the data dump won't actually kick off until Tuesday, but it's not really until Thursday until we get our first big data point of the week. That's when the Federal Reserve Bank of Philadelphia will release its index report, or as it's otherwise known as the Business Outlook Survey for the month of January. The survey covers general business conditions in the region covering Philadelphia, New Jersey, and Delaware. The December index reading indicated the third straight month of lower expectations. The index read 39.2, which still means expansion, but it's nearly half the 62.7 reading the index had back in October. The U.S. Census Bureau will also release its new housing starts for the month of December. This report tracks the number of new construction that began in the month and is a leading indicator for the strength of the housing market in the U.S. If housing starts beat expectations or come in higher than the previous month, it's an indicator that the U.S. housing market is relatively strong. Higher readings and also indicate a bullish position for the U.S. dollar. In November, there were 1.54 million new housing starts, above the forecast of 1.53 million, and marked the second straight month of increases. To round out the short week, the National Association of Realtors will unveil their existing home sales figures for December. Existing home sales report is a key component to gauging the strength of the U.S. housing market, as well as the overall economic strength of the country. If the index beats expectations, it's a positive reflection for the U.S. dollar. Falling short is a negative implication for the dollar. The month of November, was a relatively tough one for home sales. Sales dropped 2.5% from October, and that came after 4 straight months of home sales meeting or beating expectations. Analysts are expecting home sales to fall by about 1% in December. Now, earnings, again, this is a big week for earnings. To kind of close out the money markets week ahead, here's a look at some of the key earnings reports due out next week on Monday, even though it is a holiday. Bridgeford Food Corporation and QEP Company Incorporated will all report earnings on Monday. Tuesday, things really get kicked off with Bank of America Corporation, Netflix, as we've talked about, and Halliburton amongst the many that will report earnings on Tuesday. On Wednesday, United Health Group Incorporated, Procter & Gamble, Morgan Stanley, U.S. Bank Corp, Kinder Morgan, and United Airlines Holdings Incorporated will be reporting earnings. I'll be interested to see United Airlines and see how they responded in the fourth quarter, as well as the banks on top of that. On Thursday, Intel Corporation, IBM common stock, and Bank of California will be amongst several reporting earnings on Thursday. We'll close out the week on Friday with NextEra Energy, Honeywell International, Ally Financial, and many, many more. So that's a look at your week ahead on Wall Street. Until next time, everyone, I am Matt Clark, research analyst for Money and Markets, your host of the Bull and the Bear podcast, the Marijuana Market Update, and of course, this week ahead, wishing you all safe trading.